G'day folks, welcome back to Pete's Investing. It's February 29, 2024. This is the Nikkei market update. Now, we're in a bullish trend, but there is a divergence on the weekly and the daily, and the hourly has already started its bearish divergence as well. So we'll keep an eye on those. It could be a start of a downtrend. We'll also be including a new indicator which helps identify tops and bottoms, and we'll include a trading idea for your reference. So this is the weekly chart. Now down here you've got the ADX 25, which shows a bullish movement, although we do have, and it's reached these new highs. Now we do have a bearish divergence between those peaks on the CCI 150 versus higher highs on the price, and that's a bearish divergence on the weekly. And if we go back to the daily, that too is showing a bullish movement on the ADX, but the CCI 150 is showing a bearish divergence, and the CCI is still dropping off versus a recent high. It's hit this resistance at 39,638, and it's actually starting to fall off. Now we are also seeing a red arrow, and these arrows indicate it's an indicator I've written some time ago in a description, links in the description below to reference how to draw it or to track it on your own charting system. But here we may see a decline on the daily as well with this bearish divergence. And on the hourly, we've already had a double top here on the CCI versus higher highs on the price back here. And it's actually fallen down and hit our initial target area, 23.38% Fibonacci retrace. It's currently kept falling in line with the CCI 150. And that's now currently resting just near the 50% retracement level. If it breaks below the 61%, that's going to be a long, stronger signal for a bearish outlook for the Nikkei. Now you'll notice the ADX is also bearish, so on the hourly at least, we're in a bearish momentum. In terms of a trading idea, what we've got here is the daily chart, and we trade based on the trend of the daily. So if you want to trade on the lower time frames, the intraday, here we're looking at the 1 hour chart on the average down approach, and the 1 hour chart on the stop loss approach. So first off, I'll go through the rules at the end of the video, just stay tuned. But basically the initial rule will be go long when the Heikin Ashi on the price chart is green or bullish, and go short when the Heikin Ashi on the price chart is red or bearish. So again, that's one of the rules. So again, when the daily CCI 150 breaks below these moving average bands, when it breaks below like it does there, you'll see there I've got up here a short program running for the average down approach and a short for the stop loss approach. And again, I've got the rules and the parameters to the end of the video, so just stay tuned. So here you would have made 761, and that's still in a bearish or short environment, so that's still be running. So far it's made 761 on the Nikkei using the average down approach, and the stop loss approach is actually in the negative because it's actually it got as high as about $88, and then it's dropped off into the negative, and our baseline is 100,000. Now, going back to an extra step back to this point here, on the 9th of February, going long, using the same method, but going long. What I've got here at that point, you can see there, that's where it broke above on the daily. So on the hourly, if you were trading this, using the average down approach, you would have started the long programs there, and you would have stopped the long programs when the CCI 150 breaks below the moving averages. So you would have stopped it somewhere around there on the average down approach, and somewhere around there on the stop loss approach. So basically back here, where it breaks below the CCI 150 breaks into the moving average range, that down there. So let that strategy run. You would have made 2,287 using the average down approach, and the same period on the stop loss approach back here. You would have made somewhere about there actually at that point, somewhere around there you would have made about $200 on the stop loss approach. So again, just two different methods, using the average down or the stop loss, using the Heikin Ashi based on the daily trend. So stay tuned to the very end of the video. This is the first slide. I've got two slides. The first slide is the average down rules. So you can pause the video and read that in your own leisure. And the second slide shows the stop loss rules. Again, pause the video at your own leisure. Thanks for watching. Hit that like and subscribe button. Hit that notification bell, and we'll see you in a future video.